Hi, I'm Grant Stephen,
And I'm Chris Bernier.
and we're the two investment guys. This week, Chris and I want to talk a little bit more about the markets, and in particular, we want to wrap up what that second quarter net earnings profit picture looked like. Chris, the reports were a little more mixed this time, and in particular, when we look at the TSX or the Canadian market, what we had was only about 47% of the companies beat their consensus earning estimates, and that's down quite a bit from prior months and years, Chris, where that number was north of 75%. What's interesting is the total net earnings were actually up year over year by about 2.5%, but sequentially, in other words, compared to the prior quarter, they were down 3.5%. And the big thing for us, we've talked about this, is the year over year revenue number was actually down 8%, and that's a pretty significant number. Not sky is falling, but not a great trend overall. When we dig into that a little bit deeper, it tells us that the Canadian market is very heavily into metals, mining, materials, as well as energy, and the big misses came from materials and the gold companies. So skewed a little bit on the resource side, but overall not a great picture.
No, that's right. But if we look south of the border to the S&P 500, a much more broadly diversified index, we had a beat ratio of roughly 74% of companies beating analyst estimates. That's compared to a long-term historical average of about 65%. So it was quite positive, about 3.5% to the positive side year over year, and about 2.5% sequentially quarter over quarter. So again, a positive number, and we saw top-line revenue growth, which has been a bit of a challenge for a lot of companies, up about 3.4% year over year. So overall, a pretty good quarter in the U.S.
Yeah, certainly compared to Canada, going in the right direction, whereas Canada was obviously influenced by the materials exposure.
Yeah.
We wanted to talk a little bit about some of the challenges that the markets are facing right now, because there's always a few things to worry about. And right now, one of the things, Chris, is this whole U.S. Federal Reserve tapering interest rate policy. It's hit the bond markets. We've seen rising bond yields, which has an effect on interest-sensitive equities in particular. Not too sure what the next couple of quarters brings there, but again, it's a wall of worry. When does the tapering start? How much will it be? When will interest rates start to rise? Those kinds of things are a bit of a worry.
That's right. We've already seen that move in bond yields have a negative impact on a lot of the interest-sensitive sectors. More recently, though, we've seen a bit of a reversal there, and a lot of that has to do with fears of some military intervention into Syria. We got some other things on the horizon as well, such as German elections. So all of these things are going to create a little bit of uncertainty going forward, and that's going to continue to cause probably heightened volatility.
Yeah, nothing like a geopolitical event to cause uncertainty in the markets. We also have German elections coming up about the third week of September. Market kind of looking for status quo there, but doesn't like the potential for uncertainty, and also some U.S. budget debate issues, Chris.
Yeah, we got the same thing again coming up, the debt ceiling debate. And if we look at through history, September has never really been a really positive month. So a few things on the horizon to keep your eye on. We want to thank you again for your questions and comments. Please keep them coming. You can reach Grant and I at twoinvestmentguys.com.
Join us next time. Chris and I are going to continue our discussion around market dynamics and some of the things we're watching there. So until then, I'm Grant.
And I'm Chris.
And we're the two investment guys.